Okay, so hello everyone. Today we'll learn about job order costing and what is job order costing before we go in deeper for this module. So this is in module 2 and it's in chapter 4 or 5 in your book, and I hope you have some understanding from your lecturer. But before that, I'll just explain some of that before we go through the problems. So job order costing basically is how you accumulate and construct for each customer order or job or even batch. So they are usually individual. So as we can see right here, cost object is equal to job or order that is separated. So if before we accumulate everything in one in this first module, in the second module, it will be separated between each customer or job or even batch. So depends on what we are going to take. And then for job order costing, it's usually they will be used if the products are produced differently and using different resources. So yeah, as long as it's different, then you can call it as job order costing already. So everything is different. And then the total cost will be accumulated for each job or each order. So only for one order and one job basically. And usually this job order costing is used by company with work by order. Uh, for example, like architecture and then doctor, accountant. Based on like just as doctor, every client is different. So for example, I go to doctor and then I have this kind of sickness. Let's say I have COVID. Then the cost that I go to the doctor for COVID is different with someone that goes to doctor only for a checkup. That's why it's work by order. So everything is different. The same as architecture. Uh, the house you build and the house I built is different. That's why we have the different costing. For example, uh, we have Mr. A and Mr. B. So let's say Mr. A, he produced 100 pieces of. He wanted 100 pieces of mug. Let's say, so that is job number one. But for Mr. B, he ordered another 150 mug, and that is job number two. That's why it's different because Mr. A and Mr. B, they have um different types of order, and then they also are different person. That's why it's different. Okay, continuing to the next one. This is the journal that we are going to use during the module, and I know it's quite a lot, but you can directly memorize all of these as they will be useful, and you can know about this more later on after we go to problems. Okay, so the first one is accounting for materials. So actually, I don't really think that we are going to use all of this. But in case that we need to use this in your lecture class, maybe you can use this. But in my class, you don't really use this much lah. Okay. The first one is accounting for materials. Let's say you purchase materials, you will put on like materials on accounts payable, or at least cash if you pay it in cash. Materials used, there will be work in process, and you minus the materials, you credit the materials, and while you are doing the work in process, we also have the factory overhead control over materials. So actually, I'm not going to go through all of this, but this is the journal that we are going to use, and you can see it later on your on this Excel that I'm going to share to you. And then the next one is we have right here is estimated factory overhead. So estimated factory overhead is just what it said. It's estimated, so it's not actual. So not all factory overhead can be counted in actual amount. Because why? Usually the costs are accumulated based on how much product were used. So you cannot fix it. Because why? Because factory overhead mostly are indirect costs. That's why it's hard to trace. And you cannot count them in the actual amount. And if you want to count them in actual amount, okay, maybe you can. But in some point, then you can see that you need to estimate it before you can find the actual amount. Because if you haven't really go through that producing department, producing division stuff, then you cannot know how much is the actual amount. That's why you need to estimate it before. Therefore, some factory overhead costs, they need to be estimated in order to find the accumulated costs. Okay. And company, they need to determine the base for the calculation, which is called as overhead allocation base. That overhead allocation base is usually mission hours, time, week, direct labor hours, and etc. that you can find. And right here, as I said before, you have actual factory overhead and applied factory overhead. So for actual factory overhead, they are indirect costs that really incurred and recorded as the factual event. So what has happened, what has been done, it's all recorded in the actual FOH. And then in the applied one, it's indirect costs that are the result of allocation from the estimated. So this one is applied is, yeah, it's the result and it's not actual. Okay. And right here we have um, some formula that you're going to use, maybe, of course, you're going to use how to find the overhead allocation base. So right here we have the formula overhead rate is um, total overhead divided by total base. And the predetermined overhead rate is estimated total overhead divided by estimated total base. And this one we can learn that about this formula in the problem later, so it will be easier. And this one is the journal that you're going to use, maybe. Okay, so just use it later lah. And then the next one is this one, that over applied and under applied. Okay, so if you have, so factory overhead, they differentiate between the over applied and the under applied. So for the over applied, it's when applied factory overhead is bigger than actual overhead. So that's why the applied overhead is over applied. And uh, if it's under applied, then the applied factory overhead is lower than the actual factory overhead. That's why it's under applied. Okay, this is for the journal. If in case you have it. Okay, then we have the other two method is sequential method, or we can call it a step allocation method, which they provides more information than the direct methods. Meanwhile, direct methods is they allocate service costs only to production department. So what is the difference? Basically, direct method only allocates one department to another department. So only one to one. Meanwhile, sequential or this step allocation, you allocate um, one cost to another department. It's the same, but for, let's say, direct method, they have A and B costs. The only, okay, let's say A and B. Okay, they only give to production department A and B. So A and B, but in a different section. But for step allocation, it's A and B, but A can be given to B and can be given to another department as well. So, for the more detailed explanation, maybe we'll go to the problem so that you can know about the more detailed one. Okay, so let's just go into the problems so you can know more about what we're going to learn actually. So let's go to problem 2.1. Okay, so right here, actually, I have written some of the formula and stuff that we are going to use actually, so it's not going to take much time. And right here we can see problem 2.1. At the beginning of December 2021, Rain Company had two jobs in process, which is job A and job B, right? And this is the information that they have. And then during December, they got one more job, which is job C, and that was when it started. And then the following direct materials and direct labor costs were added to the three jobs during the month of December. Okay. And at the month of December, jobs A and B were completed, but only job C was sold. Okay. And on December 1, 2021, the balance is finished good. It was zero. So there was no finished good at all in the beginning of 2021. And then we are required to do what? Okay, it may seem a lot, but actually they are not that much, and it's quite easy to do this module actually. So the first one is we need to calculate the overhead rate based on direct labor cost, which is job A and job B. Okay, so we refer back to the job A and job B first in this table. Okay, so for the overhead rate, we have the formula total overhead divided by total base, which is direct labor cost for this. How can I know? Because they said the overhead rate based on direct labor cost. Okay, so we need to differentiate that between job A and job B. That's why right here we have job A and job B. And the total overhead for job A, we can see directly from here. The applied overhead is 6,300. So let's just put it on right here, 6,300. Meanwhile, for the total base is the direct labor cost, which is right here is direct labor is 4,500. So just input that 4,500. Okay, and then this one we just need to divide it and we can get the overhead rate for job A. Okay, the next one is job B. It's the same, so job B we take this one as the overhead total, and then this is the total base. Okay, so 6020 divided by 4,300, and then we only need to divide them, and we are done for number one. So right here it's okay because they got the same number. Okay, then the next one is we need to prepare a brief job order cost sheet for the three jobs, okay, and show the balance as of 1 December as well as direct materials and direct labor added in December. And you need to apply overhead right here. Apply overhead to the three jobs for the month of December and show the ending balances. Okay, so right here we have the job order cost sheet already, and we need to put it in this table. So this table, for the number, I got it from here. So you can see right here, it's the same one. And the total is the total of three jobs. So job A, job B, and job C, I sum it together. I add it together and we get that number. Okay. Next to the applied overhead. How to find the applied overhead? So for the overhead rate, for this one just now we find it that A and B is the same. Okay. So for C we can apply the same one as well. So basically how you find it is 1.4 from the rate that you find times it with the um, direct labor. Because why? They said that right here that it is using the direct labor cost, right? So OH rate, overhead rate, you times it by the direct labor. Basically, this direct labor above. So 3,600. This I'm just going to write it first. 3,150. For this one is 3,000. Okay, and then we can calculate it. 1.4 times 3,600, and then 1.4 times 3. Then you will ask, what if they are different? Okay, if they are different, then you need to add both of these actually. 1.4 plus 1.4, then you divide by 2, and you times it with this number. This one is quite confidential that uh, coincidence that it's the same number, 1.4 plus 1.4. But if this but if it's different, then you need to add both of that and you divide it first, find the average first. Okay, and then you sum three of this and we got 13,650. And then for the beginning balance, we need to see at this table it's written down that the balance at the December one, it's 10,200 and 12,400 for job A and job B, and we just need to write it. For this one is 12,400. And because job C is actually added during the month, so that's why it's not in the beginning balance, so it's zero for this. And just add three of this, and we got the total. So this one is you add three of this, four of this, sorry. This is the same one, and this is the same one, and this is the total of three of this. Okay, and if you sum three of this, it must be the same as this one. So see right here, it's the same amount. Okay, and that is how you know it's correct or not. Okay, continue to number three. Number three is you need to calculate the ending balances of work in process and finished goods as of 31 December. So actually it's written down here that job A and B were completed at the end of December, right? And job C was sold. So right here I wrote down here is job A and B is finished and job C is sold. Meanwhile, for the ending balance of work in process is zero. Why? Because they said A and B is completed, C is sold. So automatically there is no work in process anymore because A and B is completed already. C was sold already. Impossible. You are working it in process and then you sell it to other person. It's kind of impossible. And then the ending balance of finished goods is A and B. Why? Because C was sold already. That's why it's not in the finished good. And the one is finished good is A and B because it's completed. So we just need to add job A and B from this amount. 26 plus 25 in this job A and B. Okay. And we got 52,390. Okay. Continue to number 4. Number 4, they asked to calculate the cost of goods sold for December 2021. This is actually very simple because they said only job C was sold, so that's why you just need to take the COGS from job C. And which one is the COGS? It's this one, 12,000. Because what? Job C was sold, entirely sold. That's why you just need to take the amount of direct material, direct labor, applied overhead. It's your amount, right? Yeah, that's why you need to take that. And then for number 5, it's the journal entries for the sale of job C at cost plus 30%. Okay. So the first one is we have the COGS and finished goods already. So for the amount, you just input this one that we find in number 4. And for the number 5, for the one more journal, which is account receivable and sales revenue, because you sell it to other person, right? That means you need to write it as your sales revenue. And on the first one, as they didn't state anything, just assume it as account receivable in this chapter. And then we just need to add 30% out of that. So how to count 30%? So basically we just need to take this 12,000, you plus it with 12,000 times 30%, right? Oh, sorry, 30%. And we got 15,834, and that is the amount that we sell to others. Okay, and that's done for number 5. Continue to number 6. They need to schedule the cost of goods manufactured and statement of cost of goods sold of Green Company as of December 31, 2021. So for this statement of COGS and COGM, actually I've ever told you in module 1. So I hope you guys can understand this better as we have already learned this. So in this one, I have the format done already. So we just need to input the number in this table. Okay. The first one is cost of goods manufactured. So first we need to take the direct material. I'll just open this in a large size so we can see. Direct material, we just need to take from the total here as well as the direct labor total here. Applied overhead also total here. And the current manufacturing cost is the sum of three of these. Okay. And then the beginning work in process is um the beginning work in process is this one because in the beginning balance December 2021. Why it's the work in process in the beginning? Because as you can see right here, they said that in the beginning of 2021, right? Uh, they have two jobs in process, job A and job B. But at the end of December, job A and job B were completed. So actually, in the first time, they are not completed as well. They are not completed, and at the end of that, it's completed. So we need to add first, and we add both of these, and then the ending work in process is zero because why? They said that right here the finished goods was zero, and the thing that is sold is C. Meanwhile, C is not in process at all. So we don't have anything of that. Okay. And then we get the cost of goods manufactured is this minus this. And we get that amount. Okay. Continue to cost of goods sold. Right here we have the beginning finished good. Finished good beginning is 0 because A and B is still in process and C is not added in the first time. The COGM is basically you take it from the COGM that we have counted before, and COGAS or cost of goods available for sale is the sum of both of these. Then the ending finished goods is this 52,390, and we have find that before in the number 4, number 3. And then the final one is we just need to minus both of these, and we get 12,180 for the cost of goods sold, and that is done for problem number 2.1. Okay, let's continue to problem 2. Problem 2 is how to find the predetermined overhead. And right here, um, Fanny Company, oh sorry, let's just move. Okay, Fanny Company, they have uses a normal job order costing system, and it processes most jobs through two departments. And the selected budgeted and actual data for the past year is follow, and the data for one of several jobs completed during the year also follow. So this is A and B. Okay, department A and B, and then we have this job 189. And then Funny Company uses a plant-wide predetermined overhead rate based on direct labor hours or DLH to assign overhead to jobs. So job 189 is actually they want to produce this but haven't produced it. Okay. So the requirement is the first one is to compute the predetermined overhead rate. Okay, so for this formula I've written down here also, but you can see the formula right on the notes that I have given before. Right here, wait, right here. It's right here. Predetermined overhead rate. So overhead rate is all written here. So you can just refer to this. Okay. The first one is predetermined overhead rate is equal to estimated annual overhead divided by estimated annual activity level. So we just need to find the estimated annual overhead first. So the annual overhead right here is you can see it's you take the budgeted one. Why? Because it's a estimated. So it's not the actual one, but the budgeted one. Okay. So both of these. So we just need to find this one is 330 plus with 580. And then for the activity level, they said that it's based on the direct labor hours. Okay, it's written down here. So we just take the direct labor hours, which is 20,000 and 8,000. Okay, so right here we need to write 20,000 plus, oh sorry, plus 8,000. Okay, and then to calculate that, you just need to put it in the amount, which is 330 plus 580 divided by 20,000 plus 8,000. And we get 32.5 for the predetermined overhead rate. And then continue to number 2. Using the rate just now we have found, compute the per unit manufacturing cost for job 189. Okay, we need to find the per unit manufacturing cost. So for the total manufacturing cost formula, you can find it on your module before that I have written down, and they have all of the formula there, so you can refer to that back. So we have direct material here, but right here, the amount that you're going to use is from this job 189 table. So the first one is 90,000. Direct labor is you just need to add both of these. So 28,000 plus 11,250. And for the applied one, you need to calculate this. So applied, they said that applied overhead is using direct labor hours, right? So You see right here, the direct labor hours is 7,400, 4,500. So you need to add both of that first. 7,000 plus 4,000, 7,000 plus 4,500, and then you times it with the overhead rate that you have found earlier. And we got this number. Okay. And then the total manufacturing cost, you just need to add three of those. And we got this as the total manufacturing cost. But the requirement is to find the per unit one. So you just need to divide this by how many unit did they produce? And it's written down here that the unit produced is 25,000. So you need to divide it by 25,000. And we get $20, $20.12. Okay. Then the next one is the third one is we need to recalculate the unit manufacturing cost for job 189 using the departmental overhead rates and use direct labor hours for department A and then machine hours for department B. So what is the difference between number one and number three? Basically for number one is we add both of these. So department A and B, we mix it and we find the predetermined overhead rate for in general in the average one. But for the second one, but for number three, we need to find based on job A and job B. So each for job A and each for job B. And right here, it's written down that for job A, they have different base. If just now, the base is annual activity level, a level which is direct labor hours. For the third one is direct labor hours for department A, and for the department B, you use machine hour. Okay, so we start with job A. Job A, the annual overhead is 330, the same. Okay, it's the same one. And then the annual activity is direct labor hours, so it's the same 20,000. And then we just need to divide it. Okay, 16.5. But for job B, it's different. Why? Because for the annual overhead, it's still the same, 580. But for the activity level, they use machine hours, so it's 50K, 50,000 right here. Because the expected machine hours is 50,000. So right here, it's 50,000. And then we just need to divide both of these. And we get 11.6 for the rate. Okay, the next one is job 189. And we need to find the unit manufacturing cost because it's different already. The first one for the direct material, it's still the same, $90,000. For the direct labor, it's also the same. So I'm just going to take this because you just need to add both of those, right? The applied FOH, this one is different. Why? Because the amount is different. So for department A is 16.5, you times it with 7,000 because it's still the same. You are going to use the direct labor's hours. For the second one, department B, 11.6 times 4,500. Okay, and we got this number and we're going to add all of this. And then we get the total manufacturing cost. But we are going to find the uh, manufacturing cost per unit again in case they want it divided by 25,000 unit produced as they are not as they don't change at all, right? So we got this and it's done for problem 2. And as I have said before, it's actually quite simple. You just need to remember the formula and you just need to input all of the numbers and you get all of those. Okay, continue to problem number 3. Okay, problem number 3 is the direct and the sequential methods, which is this one, the direct and the sequential method or step allocation. Okay, and this one is we'll see how it differentiate between those two. Okay, so wait wait for a while. Okay, so right here we have Falin company that has two departments. They have support department and producing department. They are using the departmental data below. Assign the support department cost to the producing department, and we have got those two department. Okay, and the requirement is the first one is direct method and the second one is sequential method. Okay, And yeah, so as I said before, it's the difference between how you allocate the cost. So basically, when you are saying the um, direct method or sequential method, it's actually how you will give this support department allocation to the producing department, which support department is divided into power and maintenance. Producing department is grinding and assembling. But this producing department needs support department as well. Why? Because grinding is not possible without power and maintenance, right? Because right here you see they have kilowatt hours and the maintenance hours. Assembly as well. You need that power and maintenance to assemble your product, right? And that's why we need to use this. And for the first one, we need to allocate first. So we divide it into two, power and maintenance. How much power is going to uh, is how much power we are going to allocate to the grinding and the assembly department, and then also the same as maintenance. Uh, how much we are going to use in the grinding and assembly part. Okay, so basically this is just you need to find the rate first. The rate is actually just take this grinding and assembly one. Okay, for the kilowatt hours. Why? Because power is based on kilowatt hours. Just you see this one. The which one is you don't have the amount, then that was is what you need to find lah. Okay, so grinding for power it's 500,000 and 350. But for grinding it's 500,000. So the first one is we need to input 500,000, and the total is 500,000 plus 350, right? And the first one is the same. The second one is 500 plus 350. Oh, sorry. Okay, and you need to just divide it. And we got 0.59. And it's the same as the assembly one. Assembly one is 350, and the total is this. So I'm just going to copy paste. And it's the same, but for this one it's 350, and we just need to divide it. And we got the amount. So for maintenance, it's the same. It's 4,000 and 6,000. So basically, we just need to input this number to the calculation to find the rate. Okay, grinding one is 4,000. This one is 4,000 plus 6,000. And then this one is the same as this. This one is 4,000 plus 6,000. And we just need to divide both of these. Okay, and it's the same step again for the assembly one, but this one is 6,000. Okay, and then we just need to divide it, and we get the amount for this. Okay, and this one is for number one, and they ask right here to do the direct method, but it's not done yet because we haven't find how much is going uh to other department, how much is going to the producing department, because right now we only find the rate, right? And then right here we have the table, and I have followed this one, and this one is the amount, but the the rest one we are going to find it. Okay, so for power we are going to allocate this to the producing department. That means we are going to minus all of this, right? As well as the maintenance, we are going to minus all of that, so it's zero in the end and allocate it to the producing department. How much is going to grinding and how much is going to assembly? So this is basically how we are going to find that, and this is why the allocation is needed. So the first one is 420k. You timed it with the rate that we have found earlier. So okay, right here in the grinding just now is 0.59, and we're going to find that. Same as assembly, 420k from the power times with 0.41 that we have found just now, 0.41. And for the calculation, as simple as that. So we need to allocate that. Okay. Because I use formula in this and just directly select. Maybe it may be different if you calculate using this. For example, 420 times 0.41. You see the amount is different right here, but it's okay. It's okay if the different the difference is like uh zero, like 100 in behind, then it's okay. I can see it later in the exam, so you don't need to worry. Okay. And then the same as the maintenance one, so it's 310 times 0.4, the same as this one, 310 times 0.6, right, according to this. And then we just need to times it. We just need to calculate that with yeah, okay, we get the amount, and this total is three of this. We add three of this. Okay, the same as this one, and we are done for the direct method. Okay, it's as simple as that actually, but you need to be very careful in case you input the wrong number or the rates, because sometimes not sometimes, but because if you are wrong in this part, then you cannot fill in this table and you are going to be wrong, right? So that is for the first one. Then the next one is this one, the sequential method. Okay, for the sequential method, it's actually the same, but for, as I said before, you can allocate more than required. So actually right here we have the power and maintenance, but right here we can allocate power to maintenance as well. Okay, so not power to grinding and assembly, maintenance to grinding and assembly only, but power can be allocated to maintenance and grinding and assembly. But maintenance cannot be allocated back to power. So you must see the first the the order. So if power came first, then you can allocate it to maintenance, grinding, assembly. But if maintenance come first, then maintenance go to power, grinding, and assembly. Okay, so which one come first, and then that is how you decide. Okay, continue. So basically, it's just the same as this one, right? I'm just going to copy paste everything first, and I will let you. I'll show the difference between this later on. Okay, so it's actually the same, but the difference is right now we can put in the maintenance one. So maintenance in the kilowatt hours, they get 200,000 extra. So right here we just need to add 200,000 extra, 200,000. Okay, and right here we also add 200,000 extra, and yeah, just like that, we have the amount for this. Okay, so I'm just going to copy paste everything because it's just the same, but you need the 200,000 extra. Okay, so this is for grinding and assembly. And we have one more step to add, which is the maintenance one. Okay, so for the maintenance one, I'm going to copy paste from this one, right? But this one, maintenance is 200. So this one we change to 200 because it's 200. And we get that. Okay, as simple as that. For the maintenance one, it's the same as before because yeah, it's still the same because we don't take power, we don't allocate power to maintenance, right? Because we cannot do it as well. So it's still the same. And then we continue to the table. So in the table, it's the same as before. This one is minus 420. This one, okay, for maintenance, it will be different. So for the first one is 420 first. Okay, 420, we have three of these going to, we have three things to allocate. The first one is maintenance. Maintenance, we go back and see the rate is 0.19. The second one is grinding, and the rate is different already. So 420 times 0.48. So the different one is before it's 0.59. Right now it's 0.48. Okay, so yeah, the allocation is different. And then 420k, oh sorry, times 0.33 on this one. Okay, and then we just need to calculate it based on this. So 420 times 0.19, and then 420 times 0.48, as well as this one 420 times 0.33, and we get that. And then for the maintenance, it's not the same. If just now we just take the normal one, which is 310, right now we need to add it first. So 310 plus 80, that is the total maintenance that we're going to uh, allocate for those grinding and assembly. Okay, so right here we have 390 times 0.4 for grinding, and then 0.6 for assembly. So it's still the same. Okay, but the amount is different. It's 390 right now. Okay, so we need to calculate this plus this times 0.4, and then this plus this 0.6. Okay, and it's done. And we have the total right here. So the total is still the same, three of this. And if you see, if you add both of these, the sum is 1,200,000. And if you see right here, it's the same, 1,200,000. If your total right here and the total right here is different, then you are wrong already. Okay, it's the same with this one. The total is 1,200,000, and if we add four of these, it must be 1,200,000 as well. Okay, so this is the final for module 2. I hope you guys can understand this module. And if you don't understand, you can chat me or ask me directly in the class later on. Thank you, and I'll see you in the next module.